reading from the article that is coming. That's what at least one financial expert is saying. Charles Brown of CB3 Financial says,
one of the brilliant moves that Kmart has done is to partnership with Facebook in these e-gift certificates, so you can actually...
Of government mismanagement. Charles Brown is the president of CB3 Financial Group. He joins us this morning from Chicago.
Significantly dropping. Basically, this is the year of the consumer.
Believe that they're capable of managing anything?
Well, it's sort of like handing the keys to the chicken coop to two wolves.
Good evening, everyone, from Chicago. It's Thursday, June 11th, and I'm your host, Charles Brown, Portfolio Manager with CB3 Financial Group. We are so glad you have joined us. I don't know about you, but Mama told me there'd be days like this. There'd be days like this. And if you looked at your accounts today and your 401k, you probably feel the same way. From COVID to clarity, this is CB3 Live. Our top three topics tonight. Coronavirus cases are at their slowest pace since March, but they are rising in some states. The Federal Reserve shows its feeble hand through 2022, and the bull case, bear case discusses real CB3 investments. I was hoping not to have to show these stats again, but the truth is, it's coming back. On Tuesday of this week, new U.S. cases rose less than 1%, which was a great thing. That was 4 days in a row, and that was despite an 8.7% increase in testing. Now, you know when there are more tests, more cases are revealed. And that seemed like pretty positive news until yesterday when the news came out that, in fact, there is some resurgence. So we have 20,000 new cases. We have 2 million plus cases in the U.S., almost 1,000 new deaths, 113,000 so far, not headed in a good direction. And of course, that begs the question, are we heading toward a reemergence or a second wave? Texas, for instance, reported its highest one-day infection total since the tracking way back in March. Florida cases hit the highest weekly level they've hit. California hospitalizations, the highest since May 13th. Even Arizona spikes more so than the last 2 weeks. Interestingly, these are pretty warm places. Now, it's been talked about that this virus is going to slow down during the summer months, especially in warm places. That has not been the case so far. Interesting on this chart to me, look at the blue and then look at the red. The hit to GDP across the world is what you see in blue. If there is a double hit or a second wave, notice that the red portion is not an equal to the blue portion. So what this tells me is, even if there is a second wave, it's not predicted anywhere on the globe to be as bad as the first wave. I find this encouraging, and I don't know if that means the governments will be just ready for this, or if it's simply the virus won't be as severe of a second time around, but that's what the data is showing. Now, what happens with insurance losses? I've not shown a graph like this before, but I got this from Lloyd's of London. So look at the September 2001, the payouts they had to make. 2011 Japanese earthquakes, 2017 hurricanes, 2005 hurricanes. The coronavirus is expected to trump all of those because with the country being totally shut down, the investment portion of the insurance company, that's the red part of the bar, was also affected, whereas it wasn't affected in those previous pandemics. So again, this virus, to say the least, is tricky. Now, for me to call this virus tricky is the second most in this whole video tonight. You'll see the first one in just a little bit. It is tricky. Some states that we thought were going to be fully open now are putting the brakes on a little bit. The orange states, or the dark brown there, or light brown I should say, are lifting restrictions. We have many others that are getting a little more tepid when they see this bump in cases. And I'm expecting this to probably last through June until each of these states gets a grip on it. So why is this happening? States are short on contact tracers. Now, this is something I've mentioned on our program, but I've never really talked about it. So I'm going to show you a graph tonight. Contact tracing is identifying new cases and mitigating their contact with others. So a case is a person here, and it's widely cited by experts as the key to successfully and safely reopen the nation. So what is contact tracing? I know this is kind of small, so just kind of focus in on the images. But let's say that health officials call a person who's recently received a positive test result. The patient describes everywhere they've been. Well, they took a taxi to the grocery store, they took a bus to the post office, they took a bike to the relative's house. Well, then the health officials get on the phone and call those businesses and individuals and ask how long they were exposed. So in my reading this week, I realized there's a big difference between a 5-minute exposure and a 10 to 12-minute exposure. The longer you have exposed to a person that has the virus, the more likely you are to contract it. And indoors is much more prevalent as far as contracting than outdoors. So if someone is determined to have it, then those contacts are sent away for 14 days to basically self-isolate to keep more people from getting infected. So it's interesting to me looking at this chart. Focus in on this and look at the days. So we have April 29th through 30th, and then it gets a little darker green, and then very dark green. Going out to eat, almost 35% of the population is now courageous enough to go out to eat. Now, you might say that's a terrible statistic, but look how it's improved from back in April when only 17% were willing to go out to eat. At the very bottom, and as a musician, this saddens me, going to a concert and, of course, traveling abroad are among the most dangerous sensed activities from people. And you can see there hasn't been much progress made. Those dots are pretty close together. I find this interesting because as a portfolio manager, we need to see how people's spending proclivities are changing and where they're going to invest their time and therefore their money, because that affects how we invest. Now, you may have passed a big accident on an interstate one day and not known that it was called this, but that's called doom viewing. So if you just enjoy watching or examining what's going on in a situation like that, we're finding this now, especially with what's going on with COVID-19, but mix that with the rioting and we find ourselves doom scrolling. Guys, I'm just recommending that you don't do that. Not only is it a colossal waste of time, it will bring you down. Let me do the doom scrolling and bring you a condensing of the news each week, okay? Doom scrolling, bad idea. Don't do that. So the prognosis from all these lockdowns and the public health measures that have been in place, it's estimated from Bloomberg and their medical sources that this could have prevented maybe 500 million infections in 6 countries, including China and the US. So that means that social distancing has been effective. And if you don't believe me, we've talked on this program a couple times at least about Sweden versus the rest of Scandinavia. So we'll talk about the good part first. This is the cumulative unemployment rate difference between Denmark and Sweden. Again, they're called Scandinavian because they touch the Scandinavian Bay there, and Denmark, Sweden, and Norway have treated this differently, certainly Sweden differently than Denmark and Norway. So that looks pretty good, right? Sweden doesn't have nearly as bad as an unemployment rate as Denmark does. Well, let's go to the next graph, and this is the real truth. If you look at the hospitalizations per million, the blue line represents Sweden. When Denmark and Norway were going down over time, Sweden was not. Sweden is now cresting way above 200 per million residents. So it is a much more difficult place to recover from COVID-19 when you have these open restrictions. Now, some Swedish citizens in my reading, this is from Nordsbank, which is a Scandinavian publication, are saying it's worth it. Yes, there have been more deaths, but it beats the total shutdown to our economy. I'm not here tonight to make a vote on that. I'm just saying that this is what humanity is going to be talking about for decades. Which is it, money or health? And which is going to get the higher priority? So let's take our first question. I want to say hi to some folks that have checked in. Did today's COVID alleged second wave, not so much my news, but what you've seen in the news today, did it make you feel anxious? Answer A, no, a small case rise is to be expected. Yes, it will be a major second wave. C, I don't know, I'm just scared. And D, I'm not sure what to think. Just give me an A, B, C, or D in the chat here, and I'll get some answers from you here. Hey, Karen, how are you? Good to see you. Hey, Debbie, you signed in. Good. Alice, how are you? Tommy, does this uptick in cases affect your opinion that the country needs to open right now? It does not. This country needs to open. We'll get into the money side of it. Again, when a country opens, and I have to state this, I know we all know it, nobody's forcing you to go out. Okay, it just means you can go and do activities. It doesn't mean you must. The police aren't going to round you up and say, here, this street festival, you have to go to that. But it gives people choice. It gives people freedom, and that's what this country is all about. Okay? A. Okay, I like those answers. That's a bunch of A's. Good, guys. All right. So here's some positive news. CVS will open 10 test sites in Kansas. I guess they're picking the middle of the country to do these on-site tests. So you drive up in your car, you get the swab, and they're hoping to do 1.5 million tests a month. I know that doesn't seem like a lot, but it's a start. And what we need to have is the ability to test not only easily, but frequently. If we're tested negative, and then we have an activity, maybe we have to go to a wedding, or we have the privilege of going to a wedding, but there's 150 people there and you weren't always 6 feet from them, then you can go back to the CVS or other places and get a test. And I think that's going to be just part of our lives for the foreseeable future. Moderna is a company I've been talking about. They now are predicting they're in stage 3 of their test. They think that they're going to be able to provide 500 million dosages per year, maybe even up to 1 billion beginning in 2021. Now, I guess that doesn't sound super impressive because we have 300 plus billion people in this country. But the reality is some people will have already had it and probably won't get tested. And there will be other companies that come along to facilitate increasing this number. But it is huge progress in just 3 months. Think how long it took to get the polio vaccine, okay? It's a positive. This is an interesting stat that I just saw this week, and pardon me if I'm sort of talking about myself here, but preliminary test results from the American Medical Association suggest that type O is especially protective against SARS. Well, SARS-2, which is COVID-19. I happen to be O positive, and my wife is O negative. If you don't know what your blood type is, you should. And you might want to check it on the chart from the AMA to see apparently some blood types have a higher risk than other blood types. Again, that's brand new to me. Did not know that until just this week. So we're looking at spending and, again, the word proclivity habits, what people want to do with their time. Well, it's no surprise that recreational services and outdoor equipment are rising because the experts, the medical experts, are saying, you know what, get outside. Get out into the fresh air. That's a great thing to do. Stay 6 to 8 feet away from people, but it's great to be outside. What's going down in cost is motor vehicle insurance. I think I told this story 4 or 5 weeks ago where we actually got a refund from our insurance company, whose name I won't mention. They said, we're not paying any claims. Most of us out there are getting 3 weeks to the gallon, right? We joked about that last week. All right. Lodging away from home and airline fares. Man, I tell you, it's just a tough time to be an airline. It really is right now. But this is a positive. AMC, eyes reopening after this huge blow. But how do you keep this huge chain? It's the largest theater chain in the world. And somehow they've managed to keep it going, probably just with debt financing. But they're going to open all their theaters in July. I don't know who's going to be there. We have a little theater down the road here in Glen Ellen that Alice and I like to just walk down the street. The good thing is there's hardly anybody there. So social distancing in there, even for a Star Wars, probably not too tough. But for these, more millennial or young people, movies where they're just all jammed in together with 36 theaters, in one facility, I don't know. We're going to have to watch and see. It could be a great buy. Right now, not buying AMC for sure. Another good statistic, as you know, I'm trying to bring you good statistics. You can get the doom and gloom. Remember doom scrolling we talked about? I'm trying to bring you good data. So the government and the administration leaned on the banks to say, look, you got to give people an opportunity. You can't penalize them if they're late. Sure, they got to pay the interest. But if they're a little bit late, give them 1, 2, 3 months and set up a plan. Well, 75% of the borrowers that ask for that privilege put themselves into a deferred status, but then they came out of that status because their cash flow was not as affected as they thought it was going to be. And I'm seeing people giving up vacations. Candidly, that may happen in this household, and investing in their homes, which is their new castle of safety. I think that's a trend that's going to keep going for quite some time, which is probably why you're seeing home improvement stocks do quite well. Shoppers have surprised retailers as the states have opened up. Macy's, Kohl's, it's not like anybody's rising in sales, but what they're finding out is that their sales dropped less than expected. We got Macy's chief executive here saying, well, it was about half down as opposed to 85% down. Remember, throughout every episode of CB3 Live, I've been saying, we know the numbers are going to be negative. We're just looking for a little better number than we were expecting. In other words, less negative. And that's what we're seeing on the retail front. Consumers were asked, okay, so if you received an unemployment benefit and you received a check, did you actually make more or less than you were making when you went to your regular job? Well, 10% said more, 20% said somewhat more, 28% said significantly less. This is a wide range here. This is kind of concerning to me that the government couldn't figure out what a true unemployment benefit should have been. So it's just hard to predict where this is going to go. I think in general, you're going to see people wanting or needing to get back to work as these unemployment benefits run out. Now, someone asked me in the chat earlier, am I buying banks? Actually, I'm looking at banks, and here's an interesting thing. Banks, even though the 10-year yield, which got up to 90 basis points, is all the way back down to 60 basis points, literally in the period of a week, should have hurt the banks a lot, didn't. And I think this is one of the reasons on the screen right here. People are visiting branches much less than they were before the pandemic. And banks, regional banks, national banks are saying, I wonder if we really need all these branches. You guys remember 10 years ago, it seemed like they were building a branch on every corner in America. And the question is, do we really need that as we become more and more dependent or enabled by our phones, where we can make deposits, check balances, pretty much do anything, wire money? So I'm watching to see how this happens. So branch traffic fell by more than 30%. I don't know that all these branches are going to reopen. These banks decide to sell the property, turn it into residential. That's just what I'm wondering. This is one of the stats that's troubling to me, but there's really nothing we can do to explain it. I guess there's really nothing we can do to help it at this point. And that is that lower wage industries have created more unemployment than higher wage industries. And that's simply because higher wage usually is a service that can be done from home, so people didn't have to stop work. Our industry, many in our financial services industry, able to work at home. But people that are on the front lines, that are delivering, that are waiting tables, that are, on site doing a physical activity, more layoffs really have occurred there. And we all know why, because the country has been shut down. Now, little by little, we are reopening, and I hope to see these stats reverse. But right now, it's troublesome. So since 2009, and this is a racial analysis here, what has happened between Asians, Hispanics, whites, and blacks? Well, Asians have increased the most since the last recession, the previous recession, 2009, followed by Hispanics, whites, and then blacks fourth. Now, during that last recession, white males had the most job loss. You can't really see the stats. It's to the left of what's on the screen there. But they had the biggest hit to incomes because, if you will, it was a financial crash, and many of the higher paying jobs are in the financial industry, financial sector. But what has happened during this recession, which has just started? Well, it's mostly affected, or primarily affected, Hispanic women, black men, Hispanic men, white women, white men. And of course, this is troubling. I was looking for a way to sum up this data, and I found this clip for you. Give it a look, and you'll hear some of an explanation of why this trend is so different than what we saw in 2009.
Emma is a Latina hairdresser. As stay-at-home orders went into effect and large parts of the economy shut down, she is among the tens of millions of workers who have lost their jobs in just a couple of months. A closer look at data show how that economic pain is distributed among Americans. And it turns out that job losses during the pandemic have fallen disproportionately on people like Emma. Here's how gender, occupation, and race data can help us understand record unemployment numbers. It's actually unique to this unemployment crisis that women have been the hardest hit.
In previous recessions, women tended to fare better than men.
Men held the dominant share of jobs in sectors like manufacturing and construction, which typically bear the brunt of an economic downturn. During the 2009 financial crisis, unemployment among men reached 11.1%, compared to a peak of 9% for women. This period also marked the first time in U.S. history that women outnumbered men in the workforce, since many of them had occupations in sectors that were more resilient during a recession, like education or healthcare. Economists say many married women who hadn't been employed also joined the workforce to replace or supplement their partner's lost income. By 2019, women outnumbered men in the U.S. paid workforce for the second time in history.
Growth in service sector professions actually allowed women to overtake men as the dominant share of all non-farm payrolls that occurred, at the end of last year.
But the pandemic has now upended that.
Women account for about 77% of workers in occupations that require close personal contact and can't easily be done remotely, which is, a lot of those jobs have been hit by the social distancing measures. And so those are jobs in food preparation, healthcare support, and personal service, for instance. The unemployment rates for both Black and Hispanic women were higher than the unemployment rate for white women.
If you dive a bit deeper into the data, you see that those service sector jobs that can't be done from home employ more Black and Latinas. For many, working from home is not an option.
People are having to make very difficult choices between what's best for their economic well-being and what's best for their health and public safety.
Valerie Wilson is an economist and director of the Race and Ethnicity program at the Economic Policy Institute. She stresses that economic insecurity isn't the only hurdle Hispanic and Black women face.
Workers of color are in a very difficult predicament based on their position in the labor market and in this economy and society as a whole.
Data show that women tend to spend more time than men with household responsibilities and childcare, making job searches much harder. On top of that, most Black and Latinas who work in low-paid jobs are also the sole or primary breadwinners in their households, according to a women's rights group. Wilson and other economists expect the road to recovery to be even steeper for Black women and Latinas.
I think getting back to work will be harder for women and women of color in particular, because when we recover, the same jobs that were lost probably will not return as quickly. So that will be one factor in a slower recovery in those communities.
So, now it's your turn. Which resumption to normal concerns you the most? Indoor seating at restaurants, attending an indoor concert, and they have canceled Lollapalooza here in Chicago, which is an outdoor concert, returning kids to college, or attending a church service? Just type your answer here and we'll talk about it. You know, it's interesting. Thank you, Josh. Good to see you. When I put the little coronavirus on the screen, my granddaughter had a great question. She said, how does that mask keep that big coronavirus out of my system? And of course, she didn't realize it was amplified like 6 billion times. But yeah, I thought it was a pretty good question. We have a whole generation that's going to be talking about this for the rest of their lives, that we didn't have this when we were kids. So we got a B, A, B, A, B, A, and D. Okay, attending a church service, yeah. Indoor. So nobody's concerned about college, maybe no college age, but attending an indoor concert, yeah. Yeah, as I mentioned earlier, and there's other musicians on this call tonight, it's a tough time. It's a tough time for those of us that want to perform for others, but that's just what we're facing. Oh, forgot E, none of the above. Yeah, and guys, feel free to type E if you've got a different concern. I know some of you like to fly internationally, and that could be what concerns you the most, being able to do that. So we'll keep putting these polls out there because it's interesting times. So Alex asked that question. Okay, great. All right, guys. The U.S. economy. It's hard to even talk about the economy without talking about it in the context of COVID-19. The NASDAQ, this looked a whole lot better yesterday, a whole lot better. The NASDAQ is up for the year almost 6%, but it was well over 10% before today. S&P down 7, Dow down 12. This is accurate as of the close today, and the Russell down almost 19. It's pretty crazy. Well, here's why. It had to happen, folks. It had to happen. What's the it that I'm talking about? A pullback. We have pullbacks. If it goes up, it will go down. But why is this not a big deal in my opinion? Because the S&P has gained as much as 48% since its March 23rd low. Since March 23rd, the NASDAQ has gained as much as 50% and the Russell 59%. So this is not the time to go Barney Fife on me. Andy, what are we going to do? No, you're going to have a pullback when you've got these kinds of launches, these projectiles off the March 23 low. Do I still think the secular bull market is intact? Absolutely, without a doubt. Absolutely. So let's look into these stats now. So the NASDAQ has outperformed the Dow, the S&P, and the Russell throughout. There was a period a few days after last week's broadcast where the value indices and even the value stocks, in other words, those stocks that were beaten down, the airlines, the cruise ships, staples, actually flipped and outperformed what we're following, which is mostly momentum stocks. But that changed yesterday to the upside, and it definitely changed today to the downside. The airlines, the stocks that have been hated, just got decimated today. We actually did not do nearly as badly as the market did, although if you look at your account, you're still going to say it's pretty bad. But here's the thing, and you may not be able to see each of the stocks on here. If you guys are in both of our growth programs, most all of you are in CG. Some of you are also in SG. You're in all these stocks. Here's Tesla. Up, since 2016, and we haven't been in these since 2016. I need to be fair, at least not Tesla. But look at these kinds of returns you're seeing in the large mega cap, mega tech areas, and I'm including Tesla in that because even though it's an industrial, it's a technology. We're gonna have days like this. Mama told me we're gonna have days like this. She told you that too. I still believe that the market is the best leading indicator ever designed by man. And the economy lags the market. So the market is seeing something in all the data and saying, you know what? We still believe in this recovery. And I think you're going to see that this is a blip, a very normal blip. In technical terms, we didn't even take out the 50-day moving average. At some future show here, I'm going to talk a little more about technicals, but right now we're just filled with COVID. So, the Fed, Jay Powell, made the following comments. He said, we're not even thinking of raising rates. And one of the reporters said, well, what if inflation ticks up? None. No chance. Well, what if other countries raise their rates? None was his answer. Well, what if things really start getting on fire and we start to see certain industries and hiring costs go up? None. He just repeated. He played his hand. He said through 2022, do the math on that, 2.5 years, we're not touching rates. Now, that's like playing blackjack and knowing what the other hand is. I think that the market heard that news and sold off today on that because there was nothing that could get any better than that. But long term, knowing that interest rates are going to be at 0.25%, it's a variable rate, 0.25%, that is great for an investor because it means there's no return in cash and there's no return in bonds. None. All right? Now, here's the biggest duh in his statement. Remember, mine was the second biggest duh in tonight's broadcast. Recovery will take some time. Thank you, Jay, for that insight. We really appreciate that. The Fed wants to get inflation back up and will welcome low readings of unemployment. Gee, won't all of us welcome low levels of unemployment? Again, if these guys ever do a comedy routine, please slap me if I ever say I'm going to go to their show. They're just not a very amusing bunch of folks, especially the chairman. Powell says that he thinks that there will be a significant portion of people who are jobless once the recovery takes hold. And he's right about that. That's probably the most profound or accurate thing that he said, or non-duh thing that he said. Here's what's going to happen. There will be rotations out of some industries and into others, and it is going to require education and retraining. That is not a deal changer. That has happened throughout mankind, okay? People kind, if you will. For millennia, we have had to retrain as disruptive technologies change things. And in fact, you could argue that malls were on their way out, that online retail was just about to wipe out brick and mortar, and all this virus did was exacerbate that. Now, I don't know that quite yet, but that's how I am investing as a portfolio manager on your behalf, because that's the trend that I see. He does expect, and this is a good number, third quarter this year, fourth quarter this year could easily see GDP plus 5%, and that's because of the pent-up demand that is out there, and that's a very big positive. The May unemployment number, which was super strong, was a welcome surprise. Thank you, Jay. No kidding. So what does he mean by that, a welcome surprise? We'll get to that in just a second. So I don't know if you looked at your accounts, but let me get your feedback. Did today's stock market plunge make you feel anxious? Nah, it's just a bull correction. Yes, it did. It's a new bear market. C, I don't know. I'm just scared. Or D, not sure what to think about it. And if there's an E somewhere, then you can type that in. Let me see your answers, guys. Okay. I'm checking here in the comments to see if I've missed anything while you guys are answering. All right. A. Like those A's. Not sure what to think. Okay, Debbie, that's fine. That's fair. A poll is going on for testing. Use vote 1, 2 vote. Not sure what's going on there, but okay. Maybe that's a bot. Overdue correction, actually a good thing. I agree with you, Chris. Definitely agree with you on that. Okay, you guys see the other answers? I'm sure there are quite a few people watching that aren't answering. That's okay. You don't have to. As you guys know, some of the people online are actually my clients. We're a registered investment advisor, and we have to disclaim here. When we talk about market strategies, I'm talking about what I'm doing with my own personal money, with our family money. Our clients trade the same things, although not in exactly the same allocations as we do. And when we get to the final segment, I'll tell you more about that. But that's good. I'm glad you guys are seeing that that's just a bull correction. It's an interesting time. Yes, Pete, good buying opportunity. It's an interesting time in America when we can have a 6% pullback in one day and people shrug. Candidly, the VIX, which we don't talk about too much on this program, didn't go up that much for a 6% drop. So here's one of the reasons. This is a graph I've shown you every week for the last couple months. Okay. Karen, you got that B in, and you think it's the beginning of a bear market. All right. Well, we'll see. We will watch. We will watch. Hey, Greg. And you think it's a bull correction. Good to see you, Greg. So this graph you guys have seen, look at these, look at 212,000 in January, and then you see it's just constant. I mean, the Thursday morning weekly unemployment report is a snore. Nobody ever paid attention to it until you saw these enormous bars, because these were the weekly indicator of what was going on in the employment market. Now, obviously these huge bars are troublesome, but the direction of them is very positive. Do you see any that after the third big one, okay, which is probably the first week of April, do you see any that are rising? No. They're going down every week, which means things are moving in the right direction, and that is what the stock market predicted by its activities with the low on March 23rd. Okay, that's a positive. So the biggest payroll surprise in history is what I said to Alice when the number was there. The guys on Bloomberg, which I now call Gloomberg because they're so negative, they wouldn't even announce the number last Friday. Remember, once a month when I do this program, the very next day there's this huge report, and I can't really get to you to tell you about it until the following Thursday. I may start doing some shorter pieces. We'll get to that another time. But the point is, last Friday's unemployment report was such a shocker, they couldn't even read the numbers for 90 seconds. They were there on camera, checking, scrambling, because if you look carefully at this chart, do you see the really tiny green line that is actually going down? We had the unemployment rate expected to bump up to 15 or 16%, and it dropped to 12 and a half. Now, that seems like an absurd thing for me to say. It dropped to 13 and a half and we were happy. Do you remember back in 1980, those of you that are of this age, when we had interest rates in the 16, 17% handle, and we were thrilled to be able to refi our home at 13 and a half or 14? Yeah. It's just crazy. Look at this next chart and see the little blip, see the little green line. You can't see my mouse, but look carefully, move in on your monitor there. You see that blip? That means the employment participation rate actually increased. Again, the gloom and doom guys, the doom scrollers from back earlier tonight, they thought that number was going to come down here off the chart, but it didn't. It ticked back up. Not only that, when the Labor Department created this chart, now this is what happened. You can't see my mouse. I'm sorry. I need to quit doing this. But you see the red over there during the last recession? So we had a really bad, almost $825,000 jobs lost. Here we were in the millions of jobs lost. You see the red bar actually goes off the chart. But then look at this green bar. Lean in if you need to see it. That green bar stunned everyone at Bloomberg and almost all the news services, especially those, candidly, that are kind of enjoying this gloom. Why they are, I don't know. But I'm telling you, I saw it firsthand. That is a great number. That is a shocker that we actually saw an increase in jobs. Now, I'm spending time on these charts because this is the kind of news you need to hear to be able to have the confidence to hold on to your portfolios and not be scared out of them, okay? The prediction to get unemployment back to where it was before this crisis right now is 3.5 years. I don't think it'll take that, but I'm okay with this forecast. To make a forecast of 18 months or 24 months and then not have it fulfilled would cause all kinds of grief and criticism of the Fed and or whatever the current administration is going to be. So the Fed took a more measured approach and saying 3.5 years. I don't think it's going to take that long, but if we can get back to a 5% unemployment rate within 2.5 to 3 years, that's actually a pretty amazing achievement considering the velocity of this move. Unemployment benefits, this is another good number. Obviously, they skyrocketed in March, but look at that drop down. That meant that people thought, you know what, I'm going back to work. I'm not going to receive these benefits. Even in some cases, as I mentioned earlier, they were getting more to stay at home. But the noble American said, no, I want to go back to work. I don't want to stay in this home. I want to go back to work. So weekly unemployment benefits, even though people were entitled to them, they clocked out of those unemployment benefits and went back to work. And you're seeing that's a good number. It's not a great number, but it's in the right direction. Over the course of the 14 weeks I've been doing this, I have shown you variations on this graph. And what this does is show you the last significant economic expansions all the way from 1950. The line we want to pay attention to is the red one because that's the one we just finished. Now, candidly, I think that this economic, you see how steady that line is and how it abruptly stops, and it stopped only for one reason. It wasn't financial mismanagement. It wasn't a depression. It wasn't a recession. It was a medical pandemic. And even going back to 1918, we don't have charts that can show us what that's like. It is my opinion, on the air I'm saying this, that they will rewrite history on this expansion, and they will put an asterisk on this if we are in a recession. I mean, you saw the data on unemployment that I just showed you with the green shoots, right? If this recession only lasts 3 months or even 4 months, they're probably going to put an asterisk on this and call this a continuing expansion if my premise is correct, that we are in a long-term secular bull market. And this period of time we're in right now is going to be referred to as an aberration in a 20 to 22, 23-year bull market economic expansion with this pandemic aberration. I know that's a lot of words. Rewind and watch sometimes, but that's what I'm predicting. That's what I'm predicting. This is what it looks like on a global level. We're just talking about the U.S. right there. If you look at global GDP, you can see the worst times were the onset of World War I. The next little bars down there are during the last pandemic, the Great Depression, the end of World War II, and then you can see the down bar of it happened in 2009, which by all the other comparisons doesn't look that bad. And then the big blue bar of it's there. We'll see how long we stay in this recession, but I believe there is a pretty good chance this is going to be among the shortest, if not the shortest, recessions in the history of the country. That's what I'm predicting. So, question, and then I'm going to check, see what's going on here in the chat box. Today, what is your biggest concern for your own personal health and safety? What's your biggest concern? Last week, we spent some time on the domestic unrest. Candidly, I have to be very careful in that area because for the most part, it does not affect the market. And this is, after all, a financial commentary, economic commentary program. But what's your biggest concern? A, COVID-19 exposure, riots near my home and city. We actually experienced this here in Glen Ellen since I've seen you. The U.S. reopening too soon, the U.S. reopening too late, or other. I did get the E here. Okay, Karen, opening too soon. Got it. Nellie, too late. Tommy, too soon. All right. Too late. Greg, C, too soon. All right. Anybody else? Debbie, too soon. I think the too soons have it here, guys. Too late for Charles. Okay. We won't know. We just won't know for months, guys, because the first state to open up, and we have a Georgian on the line right here. Georgia was the first state, and they have a pretty sharp mayor in Atlanta, and I think that she's done a pretty good job. And it looks like cases are not rising in Georgia, even though they've been the most open, the soonest of the southern states. Whereas in Texas, it's a problem. California, it's a problem. Florida, seeing cases spike. You saw me mention that very early in the program tonight. We got everybody responding here. Okay, good. So we got DC, DD, too late. Yay, go Georgia. Yeah, you bet. I mean, really, Georgia's going to look back. They're going to be in the news. They're going to be in the history books because they, the governor, and of course the largest city is Atlanta, said we're going to reopen. And Trump wasn't with them, and the governor's a Republican. So, you know, it's hard to see into the future as to whether that's a great decision or not, but we'll know soon. No end in sight for distancing practices. Need that vaccine. Life remains hindered until then. No beaches. Yep. Well, don't tell California that because there's a bunch of them out there. Certainly none in New York. I think life will remain hindered. Excuse me. I don't know how long. I really don't. We don't know about the vaccine, and we don't know if there's going to be this second wave. And that's why I'm still committing to do this program as long as I need to, because this has been the biggest period of uncertainty. I think I told you last week, I'm not going to have to give you those stats again. Well, here we are back with the stats. So let's look at our bull and bear case. Georgia has no beaches. That's true. Well, I don't know. People in Savannah might disagree with that. But the bull bear case. So this gives you guys an opportunity to vote, like we've been doing earlier. We're a portfolio manager, which I think you know. Those of you that are clients, those of you that are just watching for fun, we manage money. And when I talk about bull and bear here, that means buy or sell. So last week I began this new segment, and each week we're going to look at both sides of the argument for owning or not owning a stock. So here are the signals. I showed you these last week. I'll probably do it one more week. When a market maker wants to buy, which is the bull case, he motions with his hands. I want to buy. I want to buy. Gimme. Gimme. Okay? When he or she wants to sell, it's like, get this ugly stock away from me, man. Get it away. All right? And those are the hand signals. Now, in an age of computers, it's not that important, but when everybody was on the floor motioning, you needed to know which side of the trade. If you're wanting to buy, you're looking for people that are doing that, okay? So let's walk through it. I've only got 3 cases this week. I did 6 last week because it was our first time. But I want you guys to think about this. So sometimes we don't know what we're going to do, or we're confused. You can see the middle shot here. We got a buy in one hand and a sell in the other. I don't know where we got this Jasper to do this trading stuff here, but at any rate. So technology is driving the lion's share of change. It always has. I believe it always will. And technology can be a wheel instead of walking. It can be a telegraph instead of sending Paul Revere. And of course, technology today is moving at just a logarithmic, crazy pace. And the companies that are the biggest growth entities are usually involved in technology of one kind, and that's where we want to be. Certainly one of the most prevalent is Apple. So Apple's next big thing, they're saying, they think they're going to do live concert streaming. Why is this important? Do you remember earlier when people were talking about what they were more comfortable doing? A lot of them were getting more comfortable eating out, but way down at the bottom, nobody wants to go to a live concert and they don't want to fly internationally. So Apple's thinking maybe with sold out concerts for the foreseeable future, now's the time to foster this opportunity. They think it's going to be another multi-billion-dollar business overnight. That could be right. Also, 5G technology, which has been put off, that's the next generation of cell phone speed and quality. That's been put off till 2021 for various reasons. So that's the bull case. But the bear case is that Apple's operating margins have been in decline for years. Now this, for those of you that watched my previous series, which was called CB3 on 3, we had fundamentals, we had political, and we had technicals. So this is a fundamental comment that their operating margins have been declining for years, and that's true. The basic valuation on their balance sheet, the trailing financial ratios, is at 10-year highs, meaning they can't keep it up at this pace, all right? So think of it as overbought in a fundamental analysis realm. Several momentum indicators, now we're into technical analysis, appears to be warning that a top is approaching. In other words, we're getting up here and now there's going to be a big sell-off. And there was today. It didn't necessarily affect Apple as much as some other stocks. And the long-term risk reward seems to be skewing in favor of sellers. So I've written in these 2 pages my opinions and other opinions, and I want you to come to a conclusion as to whether this is a buy or sell. So just type buy or sell in the chat box. You can use, even if you just want to type B or S, just don't put BS together, okay? Because they'll censor me. All right, and those of you that are clients have an advantage because anything that I say is a sell, we don't have in our portfolios or we've just sold it. Anything that's a buy, we actually hold in 1 or 2. We got a sell on Apple. It belongs in the rodeo. Very good. Bull, we got Thomas with a sell. Charles Todd's a buy. Okay, very good. We got, I don't know what Streamlabs is, but it's something. We got a bull on Apple. So Drum roll. What do we have here? I think Apple is a bull, and here's the clincher to my decision, which is why it's literally held in 3 of our 4 portfolios. 5G technology. They are ahead of the game on that. They are introducing their chip. They're not going to be dependent on a third-party chip, and that tips in favor of, in our case, holding or buying Apple. We bought Apple way more than $100 ago from where it is right now. Okay? And I got to sell for Pete. So, you know what? We need these balances. That's great. If everybody wanted to buy, there would be no way to buy it because the market makers couldn't offer it, okay? But it is a buy for those of you guys that are with me. So let's look at the next thing. Now, this is gold. A lot of people come to me and say, oh, we're going to have inflation. We got to have some gold. And we have held gold from time to time in our portfolio. So the bull case for gold is economic uncertainties continue to plague the financial system, and gold has quickly become a beneficiary. When people get scared, they want to go to something they can hold. They can hold in their hands like gold. Trends in the gold trust have propelled the valuation an incredible 17% higher since March 16th, and further gains look probable. That's what some of the pundits say right now. So what's the bear case? All right. Even though gold has had a massive upside run, the chances of a short-term consolidation are very likely due to the Fed talk, due to what I read you earlier from the Fed. And the drastic expected fall in inflation in the near term could increase U.S. interest rates, which could be negative for non-interest bearing assets such as gold. So what do we have for a vote here? Seems Apple will always be a buy. Okay, thanks for that, Martha. I'm scrolling down to see that. Has anybody voted yet on gold? Are you thinking about it? That's good. It's good to think. Bear. Okay, sorry. Yeah, there's a space in there. Anybody else? Nellie's a bear. Charles Todd's a sell. Same thing. Bear, sell. Chris, Golden Cowboys buy golden shotguns. Yeah, Smith & Wesson's doing pretty well. I think Smith & Wesson's a different investment, though, than gold, okay? We got a sell from Martha. We got a buy from Tom. And the answer is gold is a sell, and here is why. The Fed has played its hand, no rate increases. They are not expecting inflation. That is a bearish move for gold. I think you're going to see gold top out here, but there's an asterisk on here for you guys that said buy, because in fact, in our DG portfolio, I sold gold and I bought silver. So it's kind of a tricky question. I still like the precious metals. I think gold is overdone. We did buy silver, okay? So if you said gold, it's buy or sell, you're kind of a winner because you can pick up on the silver side. Last one, Amazon. The primary reason for investors to buy Amazon should be AWS, okay, which is Amazon Web Services. It's 77% of Amazon's total operating income. Now, you might have thought those people that are buying, juice supplements and vitamins and sneakers on Amazon are really funneling their profits. That's just not true. Okay. So as the world goes into this digital transformation, this expansion of the cloud market, so Dropbox, Box, Microsoft Azure, all these players, and it's not a high ticket item. It's not something that's terribly expensive, and the cost is virtually nothing once you've got the service centers and everything. And AWS is a high growth business, revenues up 33%, serves as Amazon's profit center. All right, but there are some downsides here. Investing in Amazon is a bet that its retail business will actually achieve unprecedented sales volumes, which has happened. Amazon is hiring like 100,000 people. 100,000 people in the first 6 months. By the end of this month, it's supposed to be 100,000 people. I don't know if that's actually happened. I'll get back to you on that. Amazon bulls may be underestimating the risk to this type of success. Why? Because the government and the Elizabeth Warrens of the world, if they get into power, will do their best to break up this company, which would not be positive. Although you could ask J.D. Rockefeller, he might disagree on that because actually that worked out pretty well for Standard Oil. So, is Amazon a buy or a sell? Amazon, A buy or a sell? Anybody? I've heard they're being sued in Europe, and that is true. That just happened 3 days ago. You're following the news, Nellie. That's good. They are. It won't come to anything because Amazon is no respecter of the European Union at all. Buy, 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 buy. All right. And the answer is... Anybody else? The clincher, AWS Cloud Services appears to have inelastic demand. That's the word of the day, inelastic, meaning it doesn't stretch, meaning it's going to stay there, because even if their retail operations rise and fall, their cloud services will keep them strong. Amazon is on its way to $3,000 in my opinion. So a couple of you guys have asked, I showed last week, in case you weren't here, I just want to show you my beautiful bride again, who helps me every week in these 80-hour weeks we're putting in to bring this to you. I hope you're enjoying it. That's Alice, and say hi to Alice in the chat box if you want. But we're having a blast bringing these to you guys. Hope you're getting something out of them. It just means a lot to us. Now, I want you to know that if you miss an episode or you want to tell a friend, if there's a specific episode, segment that you want to watch, you can. They're now being indexed. Okay, so our tech team takes our video after we're done. They trim the opening waiting room off, and then they put a timer on the each of the segments, so you can go right to it. Just click and it goes right there. So it's a pretty cool feature. Okay. So I hope you'll check that out and tell your friends. This is how to reach us or how to reach me. Email, office, website, Twitter, Facebook. Guys, we're trying to get to 1,000 subscribers by New Year's Eve, okay? I'm going to have some kind of special gift for all of you. I don't know what it's going to be. But if we can get to 1,000 subscribers, we're a ways from that, okay? And I know it's the summer months, but we would really appreciate that. If you guys could do that, it would just mean a whole lot to us, okay? So that is pretty much it for Thursday, June 11th. I'm your host, Charles Brown, Portfolio Manager with CB3 Financial Group. We're really glad you've joined us and this community. We're positive here. We're going to be positive on America's future. We want you to be part of that, and we want you to be back here next Thursday night with your friends. From COVID to clarity, this is CB3 Live.